Welcome to Tax Smarts Unlocked, the podcast for individuals and small business owners looking to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services, each episode is packed with insightful advice on proactive tax planning to help you navigate the complexities of tax laws. Here's your host, David Robson.
Welcome, listeners, to another episode of Tax Smarts Unlocked. I'm David Robson, your trusted guide through the intricate maze of taxation. Today, we're focusing on a group that's as much at home in an airport lounge as in their living room, the digital nomads. As more individuals embrace the freedom of traveling the globe while working remotely, an understanding of global taxation becomes essential. In this episode, we'll unravel tax strategies for digital nomads to ensure you meet your obligations without sacrificing your wanderlust. Let's start by understanding tax residency and its implications for digital nomads. Crucially, residency status dictates where you're obligated to pay taxes. For that reason, it's important to clearly understand how different countries determine residency status. Generally, it's not as simple as where your passport is from. Some countries base residency on time spent within their borders, others on the location of your permanent home, and some may even see you as a resident if they're enhancing your income. Knowing these rules is fundamental in avoiding unexpected tax obligations. So, what are the key factors determining your tax residency status? Time is often a primary factor. Many countries implement the 183-day rule, meaning if you're in the country for more than 183 days a year, you're considered a tax resident. However, don't be misled, as other factors can play a role, such as the physical location of significant personal, economic, or family ties, and the realistic intention of moving permanently or of indefinite duration. Documenting your travel days and understanding these rules is crucial to determining where you are as officially a resident. Next, let's talk about the importance of international tax treaties and how they work. Tax treaties are agreements between two countries aimed to prevent double taxation of the same income. They create clarity and ensure your income isn't unfairly taxed twice as you earn it abroad. Tax treaties can reduce or eliminate taxes like withholding income tax and provide insights into working across different tax jurisdictions. Understanding these treaties can significantly impact your tax bill, providing opportunities to minimize exposure to double taxation. Now, identifying and using tax credits to reduce your tax liability is essential. For U.S. citizens, the Foreign Earned Income Exclusion, FEIE, is a primary example. It allows you to exclude a certain amount of your foreign earnings from your taxable income, which is adjusted annually for inflation. Additionally, foreign tax credits can offset the taxes paid to a foreign government, reducing overall liability. These credits provide considerable relief for digital nomads, so be sure to exhaust eligible options. Digital nomads often fall into common tax pitfalls. One major example is not keeping sufficient documentation. Although managing paper trails while traveling can be tedious, these records are invaluable during audits. Another pitfall is misunderstanding tax deadlines, which can vary based on where you're classified as a resident. Comprehending your tax responsibilities per each jurisdiction, whether it's quarterly payments or annual filings, helps avoid penalties. Reporting income earned abroad and understanding its tax consequences are vital. Most countries require you to report worldwide income. Consequently, keeping meticulous track of all income flowing from one country to another is crucial. Filing ambiguities are best avoided by actively coordinating your financial activities and maintaining clarity around profiting and spending your earnings. This transparency helps mitigate misunderstandings or tax issues during income declaration. Now, let's delve into some case studies illustrating effective tax strategies for various nomadic scenarios. Picture Jane, a freelance graphic designer traveling through Asia. Jane strategically spends 180 days each in 3 different countries, carefully organizing her itinerary by understanding time-based residency rules to avoid being considered a tax resident in any one location. Leveraging international tax treaties, Jane reduces her tax obligations while maximizing savings and earnings responsibly. In another scenario, Mark, an IT consultant, uses the FEIE to optimize his tax situation. By living abroad consistently for years, Mark qualifies for substantial tax exemptions. And by employing a tax professional with international expertise, he efficiently navigates complex cross-border financial dealings. Utilizing diligent documentation and sound advice, Mark proficiently aligns his adventurous lifestyle with a strategic tax plan. Let's not forget, numerous resources and tools help nomads stay compliant with global taxation. Online platforms can easily track days spent in each location, while specialized apps offer currency exchange insights. Engaging software tools ensures organized documentation, safeguarding against audit risks, and frequently shifting regulations. These resources make tax life on the road more manageable. Maintaining proper documentation while traveling is a step you can't afford to ignore, even if papaya smoothies are on the line. As the key to unraveling tax inquiries and audits, documentation supports your claims of non-residence or exclusions. Keep physical and digital copies, keeping track of earnings, financial engagements, and importantly, your travel itinerary. A little discipline can save well in the long run. Lastly, the importance of consulting with a tax professional who understands international rules cannot be overstated. A tax expert assesses your global tax liability, optimizes the use of international tax treaties, and ensures total compliance across jurisdictions. Embarking on a new remote working adventure necessitates a proactive approach to tax management to complement a seamless journey. That's a wrap on today's episode of Tax Smarts Unlocked. We've explored a variety of tax strategies tailored specifically for digital nomads. From comprehending residency rules and leveraging international tax treaties to utilizing tax credits and avoiding pitfalls, my aim is to demystify the complex global tax landscape. Armed with practical tips and case studies, you now have the opportunity to transform your tax woes into financial efficiency while embracing your freedom to roam. Remember, informed nomads make the best travelers. Until next time, this is David Robson encouraging you to travel smart, stay compliant, and always plan ahead.
Thank you for joining us on Tax Smarts Unlocked, the ultimate podcast for individuals and small business owners ready to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services. Each episode has been carefully crafted to provide you with insightful advice on proactive tax planning. By adopting a smarter tax approach, you can focus on what you do best, growing your wealth and your business. We're here to guide you every step of the way. Don't miss an episode. Subscribe to Tax Smarts Unlocked on your favorite podcast platform and unlock the secrets to confident tax planning. Remember, it's time to take control of your taxes and unleash your full financial potential.